Welcome to Adding Dollars. In this video, I'll be going over how to buy long call options in Thinkorswim and what that looks like live in the platform. If you're new here, I usually make videos about my stocks and options trades for the week and talk about investing in personal finance. So if that's interesting to you, be sure to check out some of my other videos. Now let's go ahead and jump into buying call options in Thinkorswim. I just want to start by first talking about what a long call option is. Basically, a long call option is a contract that gives the buyer the right to purchase shares of the underlying stock at a specific price. And in terms of what long means here, long equals buying. And then if you ever see the word short or hear someone say short, that means they are selling. And I'll go into this in a future video. Some of the other things to just keep in mind are that one option contract equals 100 shares. So if you buy one option contract, you are basically in control of 100 shares of the stock. And then when we think about long call options or buying call options, we are thinking about buy to open this new position. The next thing we want to talk about before looking at a live position is when would you buy a call option? So you would buy a call option when you think the stock price is going to go higher. And then the next point is that it's cheaper than buying 100 shares of the stock. So for example, if the stock price is currently $50, 100 shares would be $50 times 100 or cost you $5,000. Whereas buying one call option would be less than $5,000. A lot of the time, depending on what kind of call option you buy, it could be significantly lower than buying 100 shares of the stock. And then the final point here is that a $1 stock move doesn't equal $1 option value. So for example, if the stock goes from $50 to $51, if you owned 100 shares, you would have made $100. Whereas if you own a call option and the stock price goes up $1, the option value doesn't necessarily go up $1. And then the last thing to talk about before we look at the live example, what are some of the risks to keep in mind? Options expire versus stocks don't expire. So if you had 100 shares of, for example, Microsoft stock, you could hold those for your entire life, whereas options have a specific expiration date after which the option becomes worthless unless you exercise the option. The next bullet point is that when you're buying a call option, there's a defined amount of risks. So how much you pay for the call option is the maximum amount that you could lose on that trade. And then the next thing is the break-even price point. So when you think about options, you have a strike price. So let's say I'm looking at the $100 strike price call option. It costs me $2 to own. The break-even price would be the strike price plus the call option price for $102. So basically, at expiration, the stock price needs to be higher than this value in order for me to make any amount of money. If the stock is lower than this value, then the option will not be making money at expiration. And then the final thing, or the second to last thing to keep in mind, is time decay. So if a stock is trading at, let's say, $50 and it stays exactly at $50 for the next 100 days or the entire lifetime of the call option, the value of the call option will still decrease. So because options expire, if the stock price stays exactly the same, then the value of the call option will decrease and you can end up losing money even if the stock doesn't go lower. And then the final piece is just around managing trades. When you think about options, you want to make sure you think about them similar to stocks, where you want to have a plan of when you want to buy the option and at what point you want to take profit and get out of the position before jumping into a trade. Now that we've kind of gone over this, I'm going to jump into the Thinkorswim platform and we can see what buying a call option in the platform would actually look like. So now that we're in the Thinkorswim platform, if you look right up here at the top, you have all of these different tabs. If you type in some stock ticker and then go to the trade tab, you'll be brought to this section where you can see the option chain. And this is where you can go about buying call options. So for example, if we were to look at this first section here you can see a variety of different strike prices. And on this side, you have your calls. On this side, you have your puts. For this video, I'm going to be focusing on the call options. So here you can see various amounts of information that you can also change what columns and what information is seen. And then some of the key things to keep in mind are this expiration date. So right here, this shows you how many days until expiration. So all of these call options and put options have 1 day until expiration. And then as you can see, it increases as you go lower. And it also shows you the specific day on which they expire. Now, for example, let's say we wanted to look at the 8 days till expiration call options. The stock is currently trading at $34.90, and we wanted to buy a $33 strike price call option. We would come right here, and then we would just go ahead and click the ask, which would be the buy amount. And here you can see this part pop up, the order tool that shows all of the information. So this is a single, a buy. We're buying one option contract of TQQQ, the expiration date, the strike price, and then the type. So it's always good to just double check this information when you are placing your trade. And then finally here you have the price. This is the amount that you would pay. If you want it to be a limit order, then you need to make sure this is set to limit and that you lock the price. If you leave it open or if you set this to market, then it'll just be based on the market price. And then finally here you have some additional options like leaving this open till for just the day or good until you cancel it. And then once you have the price set or the price that you want to pay, you can go ahead and hit confirm. But this is just one way to buy call options in Thinkorswim. And again, you can kind of do this for other ones as well. So if we wanted to buy a leap call option, we can look further out and then go ahead and do something similar where this information now updates. So overall, that's how to buy call options in Thinkorswim. Make sure to kind of review the first part of the video if you're new to call options so you can understand what call options are and some of the important things to keep in mind. If you found this video valuable, don't forget to like and subscribe and check out some of my other videos. If you have any questions or comments, feel free to leave those down below and I'll make sure to answer them. And I'll see you all in the next one.